Hey guys, welcome back to the channel. Today I'm going to be talking about this very key rejection and retest for Cardano playing out over the last few days, coming up right into this resistance I have marked out in red, ranging from 41 to 42 cents, as well as off of this green moving average here, which is the 50-day SMA. So this level has been a longer term region of support and resistance for Cardano going back to even the previous market cycle, and this is a very significant move. So I will be talking about the importance and the significance of this level I have marked out in red, as well as the implications of a rejection. So if you guys enjoyed the content, make sure to leave a like and subscribe. Also, by the way, feel free to check out our sponsors in the link in the description below. This channel is partnered with the cryptocurrency exchange, FTX.us. So first, I just want to discuss how this level has been our support going back to the initial capitulation right here in May. So notice how for Cardano, this wick came all the way down to this region. Cardano found support off of this zone, and we actually had a pretty nice bounce off of this level of support right up into this 50-day average as our resistance. And then later on, Cardano came back down to retest this. You can see another retest right here in June. We came back down again, retesting this level in July, each one holding support. Eventually, we had more retests right here in the later portion of August, and then by October, we had our fifth retest really starting to roll over, really starting to test the support more and more times, more frequently, eventually breaking down and then forming that lower low. And over the last few days, we've come back up, and ADA has had that underside retest with this wick coming all the way back above this region, ultimately the candle closing under it, and now we're starting to roll over from there. So really, this is a huge move and a key rejection, especially with the fact that we've already formed a lower low, which does signal to me that the market structure of all of this consolidation, the support, is really starting to break. Now, I really want to focus on how this level extends as far as its importance back to the previous market cycle. So if we scroll over here all the way to 2018, let's look at how Cardano interacted with this zone. Initially, when we had this all-time high, we came back down to this region. You can see Cardano retested that on this massive move down, holding it as support, big bounce off of this zone. Eventually, we came back down and then we flipped it right into resistance. So this was a key level all the way back here in 2018. And then eventually we had this longer term lower high coming up to this level once again, and another rejection resisting off of this level from 41 to 42 cents, and then continuing that big bear market trend, ultimately putting in this massive lower low, continuing that structure. So again, going out here to today, this rejection is very significant. And although it has been playing out over a daily chart and we don't have any confirmation yet on the weekly, we can't deny the fact that Cardano has formed that lower low. We've broken the support, and we're really starting to have this 50-period average come down and push us down as our resistance. So again, you can see what I'm talking about, where the rejection not only occurred off of this support and resistance zone, but also the 50-day simple moving average, which has been downward sloping ever since really this first initial move and inflection point back here in September of 2021. Yes, we've had periods where it has sloped up slightly, but I'm referring to the fact that Cardano has not actually been sustainably above this moving average for a very long period of time. And on any retest, Cardano has basically just fallen right back under it, flipped it right back into resistance. And these rejections have been fairly consistent, especially going all the way back to this peak back last year in 2021. You know, we've actually consolidated under this level for a very long period of time. All of these rejections, resistance, another rejection right here in the beginning of this year, another rejection right here in February, very consistent resistance off this moving average, and it has continued to act out even to today over the last few days. Again, that is the level where we're starting to reject off of. We're rolling over from here, and if Cardano does make a lower low, then I will consider this a longer term confirmed rejection, where at that point I'd look to some support levels much further down for a longer term region where Cardano would have some buyers and demand starting to step in. Now, that's not to say that we have to form a lower low, and there certainly is a probability where Cardano is actually able to get back above this level and then reclaim it. So on a move where we get back above it, reclaim this level as support, and then start to trend back up above the 50-day average, this would ultimately look like a longer term fake out, and then this scenario would really eliminate that bearish path of forming lower lows and continuing this downtrend. Now, that being said, fake outs by nature have lower probabilities of actually happening. So you really have to respect this longer term rejection and support and resistance flip. You have to also respect the 50-day average, which has been downward sloping and holding resistance throughout this bear market. So I hope you guys did enjoy the content and the analysis. By the way, once again, check out our sponsors in the link in the description below. If you sign up to ftx.us with my referral code SNOWYCRYPTO or with my referral link in the description below, you can get a 5% discount on exchange fees. As always, I hope you guys enjoyed, and I'll see you in the next one.